What's up, traders? Anthony Crudele here, and we are live on Periscope and on Twitter. Great to be with all of you today. We've got a lot to talk about today because obviously busy markets right now. So Jack Tacher is going to join us, and we're going to talk about what we're seeing in the markets, and we're going to talk about something that I think is extremely important: working and trading life balance. I've been following Jack's stuff for years. You guys are really going to enjoy hearing from Jack today. I have a ton of respect for him, and I think we just get right into it today because the markets are so busy. Got to do a quick plug for the sponsors, and then we're going to get Jack on the line. Futures Radio Show is sponsored by CME Group, and they are the world's leading and most diverse options and futures exchange. And right now, micro treasury futures are now live at CME Group. I tell all traders, if you want to know what the yields are doing, pull up the 2YY, 5YY, 10Y, and 30Y. And to learn more about micro treasury yield futures, go to cmegroup.com. Futures Radio Show is also sponsored by Trading Technologies, TradeStation, and FTSE Russell. The Russell 2000 is a key benchmark for small cap U.S. stocks. Be sure to check out the E-Mini Russell 2000 future symbol RTY and Micro E-Mini Russell 2000 future symbol M2K. To learn more about FTSE Russell and their products, please visit FTSERussell.com. Let's get Jack on the stream. Jack, what's up, my friend? It's great to speak with you today.
Nice to speak with you, Anthony. How are you doing today?
I'm doing good, man. I became a huge fan of yours following you on Twitter a while back, but I really got to know a little bit more about you without speaking to you from the Trader Line conference, which was great. And you and I started talking and message from there. And I just really enjoyed your presentation. So I'm really excited to speak with you today. And we're going to get to what we're both looking at in the markets and what we're seeing. It's good to have busy markets back again, right, Jack?
Absolutely.
It's nice. It gives you opportunity. But something I want to talk about first that you talk a lot about is working and trading life balance. I think this is such an important thing. Tell us a little bit about yourself and just your style of trading and what you got going on in your trading business.
Sure, absolutely. So I'm literally the guy next door. I work a full-time job outside my house. I'm married. I have 2 teenage daughters. I'm the guy next door. So when I started trading, years ago, I had to figure a way to incorporate that, which does take a lot of time. I mean, it's not something you could just do, when you feel like doing it, and incorporate that into my life. So that was, that's when I started the journey, basically. But yeah, that's who I am. I do, on the side, I do jiu-jitsu, Brazilian jiu-jitsu. That's how I train that. It's been fantastic for me. I think that's part of the balance, and we could get into that if you want to. On how you got to find something outside of trading, outside of work, and even outside your family, I think, in order to be, successful.
Yeah. So do you work and trade? Are you full-time trading and working?
Yeah. So, I work full-time, trading supplements that income. What I do is my style is I put my orders in when the market's closed. And this way, if I'm trading, if I'm working, the orders will automatically execute, and I'm not worried about missing something too bad. I mean, occasionally, do you miss something? Absolutely. Markets sometimes move very quickly without you, but overall, that's kind of how I do it. I have my orders preset when the market's closed.
I think that so many people coming to this business that want to get involved in trading should take this approach. This is why I was excited to speak with you today, because I think too many people want to become traders without thinking that they have to work. And I don't understand that type of thinking. I mean, I look at my career. I was on the trading floor and I had to work while I was a member of the exchange for other traders. And I worked at night to be able to stay in business. I mean, it's not like you just walk into this and maybe some people on FinTwit, they seem to walk into it, but you don't just walk into this business and just start getting income. And even if you are making money early on, you really don't want to be spending that. You need to find other ways to do it. I don't understand why more people don't take that approach. I think it's an ego thing. I mean, what do you think?
Yeah, no, 100%. It's an ego thing. And I think it's, again, you hear on FinTwit, you hear people, with these multi-baggers and these huge wins, and they don't really talk about their losses. So they only talk about the wins if they even existed in the first place. And I think that's where, so you have a irrational idea of what trading actually is. And I'm guilty of that too in the beginning, You thought you were going to come in and you're going to swing for the fences every time and hit grand slams. And it's just not like that. It's singles, it's doubles, and every so often you get a really good one.
No, exactly. I mean, is that how it works for you as well? I talk about this a lot. I say that you make money in moments as a trader. I actually got a great question on YouTube the other day. Somebody sent me a question and said that we've heard a lot of traders talk about the 80-20 rule, that like 20% of their trades is what makes them all their money. How does
Yeah.
that work for you?
Yeah, no, that's absolutely right. I mean, when I go back and review my trades, you definitely see these dry periods, and you see explosions, and you see dry periods and explosions, and yeah, and I think the market's good 3 or 4 times a year at best, and if we can trade really heavy during those times and kind of chill out a little bit during the other times, I think we'll all be a little bit more successful.
I totally agree. I mean, people put too much emphasis on short-term results. They want to make money every single day. And although I do know some traders that will come in and turn a buck and, pretty much not necessarily every day. Nobody really does that, but every week, every month. I was like that for many years when I was a scalper. I've gotten away from that. One of the biggest challenges I face as a swing trader is that I have to allow time in between things to work. And that's a whole other, part of my body that I had had to train myself to say, you know what, you need time to do this. Do you consider yourself a swing trader? Do you consider a position trader? Do you not classify it?
Yeah, so I do consider myself a more of a swing trader. I have retirement accounts like everyone else. I have 401ks. My wife's got 403b, IRAs, whatever. We have all that stuff. Those are all long-term accounts. That stuff we dollar cost average into. You have some positions, whatever. We adjust it. Once a year. Maybe every 9 months or something. Not too often. But then this account. And I really swing 2 accounts. Yeah. It's going to be hopefully weeks to months type of trading. I mean, that's my goal. Yeah, I know if I stay in a trade longer, I'm probably going to be more successful in it. It means it's working in my favor. I know if I look at my days in a trade and it's shorter, if I'm in days to maybe a week or two, I know that probably wasn't a good trade for me. It was too fast. It just didn't work out right. So it's not the type of trading I want to be in. So yeah, if I could be in there weeks to maybe even a few months, that's my perfect time frame.
You know, you said something I think is extremely important. If you're in a trade for longer, it's because the market's keeping you in a trade. And I think that people don't respect the feedback from the market enough, because one of the questions I get, I know you probably get this a lot, is how do you hold on to winners longer? Or how do you get the most out of that 20%, right? We talked about the 80-20 rule. How do you do that? I mean, it sounds so much easier than it is. And this is something that I take a lot of time mentally preparing and knowing that if something's working for me and I'm getting that feedback, I do 2 things. One is I start to press my trades. I'm a little bit shorter term. I consider myself a swing trader, but because I'm using futures and crypto, I know that you do a little bit more stocks.
Mm-hmm.
For me, my short term execution is really important, because if I start to see something work and I'm getting great response, I try to get it on as much as I can, as soon as I can. And as the trade's working, like with all of us, it's so difficult to try and hold that. But if you're getting that feedback, I've had to put things into play to help me stay in that trade. And that's what I want to talk to you about is how did you get to that point where you were able to accomplish that 80-20? What are some of the things you put in play to be able to hold your winners longer and have that 20% be where a majority of your winners money that you make comes from?
Sure. So I think probably one of the most important things I do on the weekend is I try to figure out, are we in a healthy market? On Saturday, I literally try to answer that one question. What type of market are we in? And I kind of reset every Saturday and try to renew that question. Are we in a healthy market? And so, I have different, things I look at, from bonds and sentiment, whatever, all kinds of things, to try to figure out the answer to that question. Now, if the answer is yes, well, then on Sunday, I go ahead and create my watch list and make my plan for the trading week at that point. I like to use moving averages personally to tell me what type of trending market we're in also. I think that's so simple, but it just works perfectly. I mean, we know if we have a bullishly aligned moving averages, we're in an uptrend. It's that simple. Don't overthink it. Don't look at every tick. That's it.
Exactly. I mean, I love how much you hear from people that say, well, moving averages don't work. Well, they may not work for you. And I've gotten a lot of pushback on this, and people are like, oh, don't tell me that you use moving averages or whatever. Now, I don't use moving averages for entries, but I use them as guides of trend. And they're great because you could take that moving average to whatever time frame that you're looking at. And you could say to yourself, I like the 10-day moving average a lot for my time frame.
Mm-hmm.
If we're holding above or below it, and I see my other indicators, which I primarily use Bollinger Bands, and we're staying below it, I don't need to look at a trend line or anything else. I know what the 10-day trend is.
Mm-hmm.
It's just that simple. And that's something that I put into play to keep me in a trade. I mean, people, when they say, well, how do you get better at holding winners, or how do you get to that 80-20 where 20% are? You need to put things in that keep you in the trades, right? You need to put those things in. So you said you use moving averages, because we're going to go to the charts here in a little bit. Before we get there, I want everyone to understand your style and your thinking before we get there. So when we get to the charts, we just start talking about markets and what we're seeing.
Absolutely.
Take us from the beginning. When you sit down, you say you do a lot of prep. What are you looking at? What are the tools you're using?
Okay, so my charts are going to be really simple, and I believe that there's elegance and simplicity, right? If I have too much stuff cluttering up my charts, I'm obscuring the most important thing, which is price. That's the way I look at it. So I use two moving averages. You're going to see the 9-day EMA and the 23-day EMA. Those are the two that I use. You're going to see volume on there, and then you're going to see price, and that's really it. I'll draw then areas that I think are support and resistance, or at least were prior important areas. We'll find out after the fact if they're support and resistance, of course. But that's as simple as I can make it. Because if price isn't talking to you, what are you really looking at a chart for at that point? So that's what I look at as far as my charting goes. As far as things that I look at to tell me if the market's healthy or not, I think there's different things. There's sentiment, bond ratios, that kind of tell you what's going on, and breadth. I think breadth, which has been deteriorating since February, is really important. With that being said, as we know, breadth is not a timing mechanism. Like, it's been deteriorating for 6 months now, 7 months now, and so we can acknowledge it, but that doesn't mean that we can trade off of it.
So it's awareness. You want to be aware in case something starts to happen, like what we saw, a couple of days ago, to where all of a sudden now you say to yourself, look, this has been showing it, and now the market's giving me the feedback that this is potentially happening, and now maybe I take caution with whatever it is I'm doing, or it sets up for something. I just call it market awareness. And I think this is also something that a lot of traders, I really believe, struggle with, is taking some of the things that they hear out there, whether it's on Twitter or other podcasts or other things, and saying, how do they utilize all this information? Because we're at a time where there's just it's overwhelming. I think that traders that have plans and know what they're looking for, are confident in what they're looking for, can take those types of things, like you said, with breadth. And it's just like sitting back there, right, Jack? It's something that you're like, okay, it's not making me trade right now, but if something starts to happen, I'm like, okay, it matters now. We used to say on the trading floor a lot, nothing matters until it does. We weren't watching news a lot. We would see headlines and we watch the market. Nobody would say, oh, I saw that headline, let me hit the bid or buy the offer. We very rarely did that when we were on the floor. What we did was we'd see the news and then we'd watch. I think everybody nowadays, the algos can do that. We can't do that. So when I see something or hear something or there's anything going on, I go back to the tape. You said 9 and 23 moving averages, volume, price, and breadth. Right? That's it. And before we get to the charts, what is your time frame that you're looking at? Is it daily, 60-minute? Do you have multiple time frames?
Yeah, I rarely will go under a day. So I'll do daily. I look at weeklies, and I'll look at monthlies once a month. But that's about it. Sometimes I sneak it every couple of weeks in a monthly, but in general, once a month. But that's it. So I like to look at my dailies, and I think weeklies are instructive, again, just for that longer, zoom out, see the forest type of thing, of what's going on in the market. Did we go straight up and I didn't realize it? Sometimes that happens, right? Sometimes the market's moving and you're so focused on the minutia that you don't realize what it's actually doing.
No, absolutely. And are you long only? Do you short anything?
Yeah, I rarely will short. Every so often, if I'm not exactly sure what's going on in the market, but I don't want to really sell my positions and go to cash, I may, throw like an inverse ETF or something in there just to kind of make it a little bit neutral, just to like get a better feel of what's going on. Just kind of keeps me in a little bit longer.
How much does news or the Fed or earnings come into play with your trading?
Zero,
Zero.
nothing,
Doesn't matter.
nothing. No, I mean, it would have to be a catastrophic news event for me to take notice of it. Yeah, it doesn't. No, I know. I think there's a Fed meeting this week. I think I read someplace.
Yeah.
Okay,
Yeah.
it is what it is. I mean, I have no control over that. That's And listen, I feel like there's a Fed meeting every other week. I don't know
It's
what their cycle is, but I feel like there's always a Fed meeting to be worried about, and there's always
yeah.
something to be worried about.
There's always Fed speakers. These
Mhm.
Fed meetings are, you know,
Right.
I used to trade them as a futures trader. I used to love Fed days. I mean, we used to get geared up for them, and they were the focus.
I get
Nowadays,
hard.
I look at it now and go, you got the algos and the machines reading the headlines, and they're taking one word and they're moving it. So my one friend taught me this, who's been on the show, Brad. He's like, look for stupid news. He's like, if the algos are overreacting, the only thing I look for on Fed days is overreactions, giving me prices that I didn't think I would be able to get. And I look at the news and say, how relevant is it? You said this. You said, unless the news is catastrophic, it's not going to change what I'm doing. And I feel the same way about way I look at things now, because I can't be the first one to click in when something comes out, because first of all, how am I even going to know exactly how it's going to react? I mean, sometimes you do. If there's a major headline regarding something that I know is going to push a currency or gold or something there, sure, you can hop on that. I don't do that as much anymore. But when it comes to looking at the news and looking at all of the things that we're dealing with on a constant basis out there of information, I just use it as triggers to help me get in. I mean, so many people say, the algos or the HFTs, they drive me crazy. And I say, well, you got to learn to be able to adapt to what they're giving you. And I feel like they give you a lot of gifts. I mean, sure, no doubt. Sometimes I get frustrated because they run away from me. I can't get something, or, that is part of this business, no matter what. There's always going to be some frustrations. But ultimately, I think if you learn to understand what it is that they're doing, especially around news events, I like them as, like I said, those opportunities that maybe I wouldn't get if they weren't there, because maybe retail and pros wouldn't have done anything. I mean, I don't know what you think about that.
Yeah. And listen, how many times have you seen a news event or a Fed speaker or whatever, and the market reacts to it, and then 10 minutes later it completely reverses and goes against you? So if you are that quick to jump in, you just got caught, at that point. It happens all the time where you see that it tanks, and then, 15 minutes later it's green again or something like that.
I mean, exactly. I mean, but this goes back to where I say that's where I look for the stupid news. And that's my buddy's words, not mine. But I think it's funny when you think about that, you look at it and say, is this move really matter? And I look at it and then I say, depending on the product I'm trading, like I'll give you an example for me. Yesterday, I bought some Ethereum again. I saw equities getting cracked. I've been waiting to buy ETH on a dip. I saw that they got cracked. I stepped in and I bought it. And I looked at it and I said, this is stupid news. It has nothing to do with Ethereum. If anything, what I look at with crypto, and maybe we'll talk a little bit about crypto with you, is crypto is what I think should be doing well in these types of environments with some of the news and things you see. I mean, I understand that sometimes, when you have equities getting pulled back, you're always going to have this, potentially selling something off of something else. It doesn't necessarily mean it's correlated or tied to it, but it does result in some selling. And I looked at that and said, that was the only thing I could step in. I was actually waiting to see what was going to happen in S&P. I didn't do anything there. But, ETH, actually, I looked at it and said, that makes sense to me. And do you even look at crypto at all, or are you just stocks?
It's funny. I have been watching crypto since 2012, forever, and
Wow.
I'm the guy that said, I don't know if I trust this. It's kind of wonky how you have to get into this. I don't understand it, whatever. So I completely missed the boat on crypto. Like I'm not the guy that got in early, even though I knew all about it. I just never took that plunge, and I should have. That's one of my financial mistakes I made. But recently I've been starting to buy crypto, and
Hmm.
what changed for me was that our government had a billion-dollar spending bill, and basically how they're going to tax crypto held the thing up for, I don't know, a week, 2 weeks, whatever it was, held the whole thing up. So if I have the US government wondering how they're going to tax crypto, I don't think they're going to regulate it out of existence. And that was my the biggest thing I was worried about with crypto, was that in one swipe of the pen and it's regulated out of existence. And I don't think that's possible anymore, especially as you see the adoption and the growth of it across, from El Salvador, using it as one of their main currencies. I mean, that's just a beta test for Starbucks to figure out how they're going to get payment, in larger markets, whether it's US or France or wherever. So I'm now a believer in crypto. I don't know which one's going to win though. So here's my approach. And I actually started this portfolio this summer. I'm going to take the top 20 market cap coins by market cap. I'm going to take out all the tethered coins and all the meme coins and all that stuff. And I'm going to buy them all, whatever's left. And right now, I think there's about 12 coins I'm buying out of the top 20, 22 or so by market cap. And I'm going to dollar cost average into them. I'm going to keep buying them, and buying them. Because if I put 1, 2, 3, 4% of my net worth into crypto, well, if it goes to zero, I'm not going to be hurt. But if it goes 100x or 1000x, well, I'm going to make a lot of money. So I think that's my way of getting into crypto and doing a way that I can sleep at night and be comfortable with. And listen, and luckily I bought Solana, and so that was up like 400x like a week ago or whatever. Did I know Solana was in it? No idea. But it had the right market cap, had the right, my criteria. So we buy it, and that's that.
What do you think about NFTs?
Man, NFTs. It's funny. I went on Decentraland for the first time last week just to see what the heck is going on with that. People are displaying the NFTs on there and they're showing them. I don't see where the value is. I look at them almost like trading cards, like football cards or baseball cards in a lot of ways. I don't see how they're going to monetize those things.
So I've been buying. Yeah, I mean, I'm not disagreeing with you. I think the JPEG aspect of it is, I mean, I get it a little bit, and I understand what it is. I get it in the sense of why it's happening, but I am not looking there. And I actually have been putting together an NFT little portfolio. It's funny now, my crypto portfolio is now as big as, in terms of what I'm trading, NFTs and everything, as my futures accounts, which is crazy. And it might even be a little bit bigger, actually.
Wow.
And what I start to look at is, with NFTs, is I've been buying Z.Run. I have a horse stable. I've talked about this a little bit. And I think you need to find, not you, but I'm saying when you're looking at NFTs, is is there any utility behind it? So I started putting together a horse stable, and I've been breeding horses and stuff like that. And I really think that when I'm starting to see how that NFT actually works with that, I'm not going to get into the whole Z.Run thing, but I think if people are interested in NFTs, that's the one thing that I have found I started this maybe 5 months ago, that actually makes sense to me, where the NFT space can be used. The JPEGs, I know it's like, who knows what can happen with that stuff. It's all spec. I mean, I think that, but that's what we do, So sometimes things that are hot, you step in, you do it, but you got to be quick to get it out. And that's the question I think is going to happen is that what happens when you have a lot of people start to get out, I don't think, the buyers are going to be there, because it's one of those things where I think it's a wave up and a wave down, bubble, call it whatever you want. But for the prices that some of those things are selling for, who's the guy who comes in and buys that when you start to drop 10, 20, 30%? Are they going to think that's on sale? Are they going to find that same value? It's different when you're buying things that are going up versus buying things that are going down. And I think it's very similar in the mentality of trading. That's what I looked at it and said, if I buy an NFT, I have to assume it's going to go higher because I'm going to sell it. I know some people are saying, well, I'm going to buy these NFTs, I'm not going to sell them. Well, why are you buying it? I mean, I don't want it. What am I going to do? I'm going to buy it and look at it? So, but it's, nonetheless, it's an interesting space that I think is going to have, I think it's going to have a massive impact. It already has, but I think going forward, there's a lot to talk about. But Jack, we're going to go to the charts here in just a second, and just give us a quick rundown of some of the things before we take a quick break that you think that you're going to want to show us today.
I think I'm going to go through some of the breadth studies I look at. I think that there's a lot of utility in that. And I like to in the bond ratio that I look at, and what I'm looking for maybe to see if this market's going to get worse, or how I'm judging the health of the market. I think we'll go maybe into some of that stuff. How's that sound?
It sounds great. Now,
Yeah.
everybody, I'm putting a link right now into YouTube and Periscope. In this 30-second break, you could download my ebook. It's Trading Instincts versus Trading Rules. I think it's extremely important to really understand the difference. We might even talk about that a little bit here, Jack. So, everybody, we're going to take a quick 30-second break. And when we come back, Jack and we're going to the charts.
Replace your exchange with TradeStation Crypto. Dealing with multiple exchanges is complicated and it takes time, except with TradeStation Crypto. Because we are not an exchange, we are a broker. You have access to multiple pools of liquidity, all in one platform, in one account, one way. Trade crypto your way, plus earn interest on your eligible cryptocurrencies. Get started in one click.
Trade the global markets with Trading Technologies. TT is the world's fastest commercially available futures trading platform, now with integrated tools for advanced options trading, cryptocurrencies, and trade surveillance. Learn more at tradingtechnologies.com. All right, everybody, if you are listening on Twitter, give us a retweet or a like on a tweet and hit that like button if you're watching us here on YouTube. It's always great that traders take the time to speak with me, especially during a busy week, a busy day in the market. So, Jack, we've got the charts up. What are you looking at? And walk us through the setups that you're seeing.
Okay. So the first thing I'm noticing, and I like to use the Qs as my general index of choice. So the big gap yesterday. So that is really, really important. And not only do we gap, but we gap below an area that I had deemed as maybe important. That shows a lot of, it's not easy to do. So when I see this push down like this, it makes me very, very cautious in the markets. On top of that, again, here's my moving averages I'm using. And you'll see it was in a nice bullish trend for a really long time since May, really. It hasn't been violated. Well, now we're starting to get this bearish cross, we'll call it, right here. So definitely the dynamics of the market has changed, and I'm not a big right here. It tells me that this isn't like a one-day event, right? So this is something that I need to just is a structural change potentially in the market, at least for the short to intermediate term. Longer term, obviously the uptrend's still intact. So that right there, so that's a lot of data right there. I think this gap, that's information right there. And also now that this area, which was prior resistance, now potentially becomes resistance again. All right, so that's important information. So that's the Qs in general. I also like to look at RSP better than even SPX, which is the equal weight S&P, right? And so this is starts my breadth work, and so here's some stuff I had drawn on there. So as we were coming down to retest this area, I didn't know what was going to happen. I thought, what I really thought was going to happen was that we were going to get some kind of bounce, and then we were going to come to here and then potentially go higher, or break through and go lower and then some kind of head and shoulders top or something like that, right? So I really didn't think that we were just going to crash right through this level and come back right into this range. But that's what the market decided to do. So that's what happened. And so now, as what I'm looking for is, it's around 3% or so to the bottom of this range. And so that's my new floor that I'm going to be watching. Again, this is the RSP, so it's the equal weight. So it takes out, the Apples and the Amazons or any of the large cap, mega caps or anything like that. It's going to help sway the markets. This is, exactly what's going on. So that's kind of, interesting to me. So 3%. Now, I'm a growth trader. I like growth names. I like things that, are going to move a little bit faster, right? So if equal weight S&P is 3% away, a growth name maybe has 10% move to the downside, in general, 2 to 3 times. At least that's what I've, through my experience, I've seen 2 to 3 times what the S&P does is what growth names tend to do. So I have to understand how much floor or how much lower I could potentially go in this cycle. So that's the RSP. I like looking at that, and then I start to get into some other stuff. I like to look at the bond ratios, which is IEI by HYG, right, divided by HYG. So this is high yield bonds. I'm sorry, this is government bonds divided by high yield bonds. And so I'm just gonna get all these moving averages and stuff out of here just so we can take a look at this. So this is a ratio chart. And so this was back COVID right here, right? And so I don't really care what this is doing as much as it's not doing this, right? So widening of the spreads right here is usually very negative on the market, and the market reacts poorly to that. So that's always what I'm looking for, right? I want to see, whether it's sideways action, but I don't want to see these big spikes in the market because, the bond market, they say, is pretty smart. And so if we start seeing, people, going into government bonds and selling high yield bonds, and this spikes up really fast, I think that that's an environment that is not good to be on the long side, personally. So you see we had a little spike yesterday, but nothing that concerns me overly, because it doesn't look like this, right? That's what we're looking for, this. And you see on the way down, we've had some points where we've had some stuff, but nothing crazy. So I'm looking at bond markets to kind of confirm what or not confirm what we see in breadth, and we haven't seen that confirmation yet by the bonds saying that the whole market's going to fall apart. And so that's what keeps me on the bullish side of thing. I'm not going out to buy the dip tomorrow, but I think that the longer term trend is still intact. And when it's no longer going to be intact, we're going to see a change in the bond ratio like this. The last thing that actually do two more things. I like to look at the MMFI, percent of stocks above the 50-day moving average. I put in just some general areas for extremes. And as you can see, only 32% of the stocks are above their 50-day moving average. So, over time, breadth is continually since, was it February?
Yeah.
It's been just deteriorating, and again, we had, a little bounce here, but now it's rolling back over. So again, not a timing mechanism, but you just see under the surface, slowly things are churning and not being held up as well by the institutions. And I think there's a lot of information in that also.
What's interesting to me is that we've actually been low. What time frame is that? Is that a daily?
This is daily.
It's a daily, yeah.
Mm-hmm.
Is that we're actually not making a lower low there than we were not too long ago. And I'm wondering, do you look at things that you're comparing breadth to see if markets are making lower lows or higher highs or anything like that as a comparison to say, hey, this is something that is also interesting to me?
Yeah. So, we're making, we're not making lower lows, which is constructive, no doubt. And we're making higher highs on this shorter term time.
Yeah, that's
frame,
what
right?
I was saying. Yeah.
Yeah, right there. So and so that's the indecision in the market, right? So there's no clear cut, like no one can tell you exactly like what's going on. Maybe you could say, okay, well, here's a trend line, and and now we're breaking below that trend line, so breadth is starting to deteriorate again. And I'll look at that, but I won't trade off that. But that will be part of my it'll be my thoughts. Let's put it that way. But not actionable.
So when it comes to breadth, are you, in your experience, noticing that it is similar to what we've seen here, to where it starts a period of time before it actually starts to impact the market? Is that how it typically works?
For sure. It goes back to the old adage of, in order for, a aircraft carrier to turn around, it takes a mile, right? It takes a mile and the markets are the same way. Big institutions aren't nimble. They can't get in and out of the markets the way, you and I can. So it takes a long time for them to reposition themselves. And there's a chance that's what we're seeing here. We won't know again until after the fact, but there's a chance that they're repositioning for next year. So they took all of 2021 potentially for them to get into positions that they want to be in 2022.
Got it.
So that's why I look at it.
Yeah, no, I get that. And I want to maybe have you go back to the QQQ a little bit. I want to just take a look at it and a few things here. Are you currently positioned in this right now?
No, I only have
Okay.
one position on right now.
Only one position.
Yeah.
So let's look at the QQQ, because this is something that, when I see like the NASDAQ I've been looking at as for potential trade opportunities right now, I'm waiting to see how things obviously set up. I'm in nothing at the current moment, but I'm looking to buy. At this point, I'm pretty still bullish, I think, on the overall trends, and I will use futures as a swing position. What are you seeing here in the Qs to where you would start to say, okay, this looks like an error. This is a setup I'd be looking for that would start to get me interested in being long.
Yeah. So I have to have something I can manage risk against. So right now, I don't have anything I can manage risk against unless I want to get short. So if I want to get short, I can manage risk against this area, right? Or potentially these downward sloping moving averages, and maybe play to the bottom of this range or something of that nature. So, but to the upside, I don't have anything I'm comfortable with for my time frame to manage risk against. So I wouldn't play it, now to get long, if price comes back above this area, maybe above 370-ish or so, convincingly, and these moving averages start to flatten out and prices above maybe flat to rising moving average, 923-day EMA, that would change my mind. But right now, this structurally does not look conducive to me to be, bullish. Maybe sideways chop. I'm not saying we have to go down and be completely bearish. It could just move sideways here. But yeah, I mean, and there's a lot of buying that's been traded here in the past. So, if we do break down from here, that's not a good sign, obviously.
Yeah. It's funny. I see the same thing on my short-term charts. The only thing I see, the S&P looks weaker to me on my stuff, and the NASDAQ still looks rangy to me. It's not really given up, we'll say, to where it starts to look bearish. Like the S&P to me does look like, I think you would want to be in a short-term selling rallies versus buying dips. Maybe we'll take a look at SPX. And, it's just one of those things where, well, by the way, we got Canny saying what's up to us. What's up, Canny?
What, Tom?
And, I was just curious to see, because you use the moving averages, and here we are now at the S&P, are you looking at it? Does it have to regain the moving averages? Because, in my thinking, it's like, do you have to have that much of a confirmation happen first, or could it go down to support, hold support for a period of time? Maybe that breadth starts to strengthen and you're getting in, and then potentially it gets above the moving averages and maybe you got a better entry. I mean, just walk us through that.
Yeah. So something that I've changed, and actually COVID taught me, the COVID rebound taught me. So I was in the camp of we're going to get a double bottom, and when we rebounded, there's going to be a double bottom coming, and then that's going to be the opportunity. That never happened. We basically went straight up, and I should have paid more attention to the breadth thrust, right? And then there's different ways that people define breadth thrust, but basically 90+% of the stocks moving higher is a breadth thrust in general, at least the way I look at it. So with that being said, if I see a breadth thrust on high volume, then that would be a potential sign, even if it's below moving averages, to start to nibble. That doesn't mean go 100% in. It just means, okay, what's been holding up well, what looks pretty good, because just, again, I don't always trade indexes. I'm trading usually individual stocks. So if we see the breadth thrust and the index is under the moving averages, but I'm looking at a stock that's never dipped under the moving averages, there's my relative strength. That's the next leader potentially.
Let me ask you this about breadth. You talked about how it looked bearish from February. Now that we are seeing the market pull back down, and let's just say the breadth starts to get bullish, does that have a quicker impact? I mean, obviously the indices have gone up, and they're really built to go up. We know that, right? They're not really built to go down. Is that an indication that would be taking place quicker and give you more of a reason to step in earlier?
100%. I mean, if breadth, so listen, if I see RSP outperforming SPX, right, or any of the equal weights outperforming their weighted indexes, if I see the value line geometric index really start to take off, I think that those would definitely get me much more bullish, much faster, without a doubt. But that being said, I like trading above rising moving averages.
Yeah,
no doubt.
Because like we talked about early on, that's how you hold the winners. I mean, when things are all lining up, then you have that ability to to manage the trade better, to stay in a trade longer. Everybody wants to hold a trade as long as they can because, well, typically we want to hold a winner as long as we can, right? And it's funny how so many traders, this is where I think stepping in here, trying to find a good price, bottom feeding, and who knows, this could be the lows, I don't know, where it gets really hard to hold a winner, right? Because let's just say it stays below those moving averages you have for weeks, right? And if you're a swing trader and you're saying, well, look, at that low is still held, but it hasn't gotten above the moving averages, that really forces you to have a weak hand, right? And probably on a down move, you're going to hit the bid because now you're going to be like, you know what? I'm struggling to hold this trade. Is that kind of the reason why you really like that? Because at that moment, you just feel like you have a stronger hand in it and you're not going to be as active?
Right, exactly. I mean, the more active I am, the poorer I trade. I mean, that's just the way it is. It's just the way it is, right? I mean, sometimes you overtrade because you're trying to be too smart, too cute with it sometimes,
I feel for me that it's the only time that I can really be very active is when it's really volatile, like right now. As a futures guy, for me, intraday, I could step in and out of the market and I feel like I could be somewhat active there. But overall, the minute that ends, and really these days, and we'll talk a little bit about that, Jack, how fast is volatility, right? I mean, it feels like these breaks, if you just look at this chart of the SPX, I don't know how far back this goes. I'm looking, it looks like it's probably close to a year, right?
Yeah, here's a year right here.
Look at how little time they spend. It's almost like the same thing over and over again, almost no time spent on the breaks. I mean, let's talk about what would start to say. We both said that in the short term that we see weakness looks like it should continue. We're seeing a little bit of a bounce today.
Yeah. But, though, and let's talk about that for a second. So if you notice on the way up, we have these big moves up. It gets extended here. These moving averages are kind of wide right here. And then once it do, it checks back in, gets up, checks back in, up, back in. And it just keeps from the whole year. It's been doing the same thing. Well, now we're doing it from the underside. So the expectation at this point is going to be it's going to drop down, come back, check back in. And then my expectation is it's going to roll back over. Now, if it doesn't, then that's information, I think, at that point. But just like how when it got extended to the upside, it checked back in. As it gets extended to the downside, I'm expecting it to check back in and, lull some new longs back in, thinking it's the bottom. And then another down move, just the same way, because the trend doesn't matter if it's going up or down. The trend is the trend.
Yeah, I mean, when you really look at things right now, I feel like this next week or two, pretty critical. When you look at the technicals, I mean, if the trend is going to continue lower, we're going to really know within the next week or two. I think that it's going to show it to us. And I think that's something else I want to talk about. You and I are talking about things that the market proves to us. We don't know. We know that we don't know. But the market's going to show us something. And this is kind of why I like Bollinger Bands. I talk about this a lot because when I see a mouth opening in a Bollinger Band and we're going lower below the moving averages, that to me is short-term bearish. And that's really the first time I have seen the S&P on a daily start to hug a bottom Bollinger Band below the 10 and 20-day moving averages. It's been so long since I've seen it. It's almost like I'm looking at it going, do I really, am I going to start selling rallies now? So even with the stuff that you're looking at and the way you look at things, it feels like we're at a critical moment.
Yeah. And I'll be honest, it feels like there's been a shift. Because even when you look at, again, Bollinger Bands, and moving averages, like look back here. Like, yeah, they crossed back here and then we had this nice, powerful move, right? And price quickly got back above it, right?
Yeah.
That's a lot of information right there. Today, it was up, 0.75%, whatever it was this morning. And really, it's kind of sold off since the open. That's a very weak response for after a 1.7%, roughly 2% in different markets, whatever you're looking at. It's a very weak response to a big down day. To me, it's just it screams of that they don't want to buy this market yet. I mean, that's just so any rally, even if this drifts a little bit higher, I mean, especially if it's on lower volume, any rally, it's got to be suspect. I mean, this is definitely you got to prove to me type of market.
No doubt. 100% no doubt. I just want to let everybody know. I'm going to start taking questions from everybody. If you have some questions for Jack, please put them in Periscope or on YouTube. and we'll start to ask Jack some of these questions as we got about 10 minutes left here with Jack. Jack, I want to take us through, because we just both agreed that seems like a critical time.
Yeah.
And I always say to people, I'm not here to tell you what to think. I'm here to teach you how I think. And if that helps you as a trader, great. What are some things, let's go over for the SPX, I think maybe even the Russell, because I think the Russell is a key market to be keeping an eye on right now, and the NASDAQ. What do we look at to say that trend is now going to be confirmed? It's going to be bearish for a period of time. We start to look short. Do you compare the indices across the board? Maybe one turns bullish, one is still bearish. Will you look at that? Walk us through what you'll be focusing on, your process-wise, to confirm bull or bear trend going forward.
Gotcha. Well, IWM is probably the easiest of the bunch, right? Because it's an equal weight chart index by itself. And it's been in a range since February, literally sideways. I mean, look at this. It's crazy, right?
That's why I think it's so important, because if it gives way one way or the other and it continues, I think it pulls one way.
100%. I'm 100% with you on that. So so I'm watching the IWM pretty closely to see if this, we'll call it, 208-ish, 209, whatever, this area, if it holds, right? If this holds, then I think it's just sideways chop, and it's more the same. If price starts breaking down below this area, I think that's a big deal. I think that's a really big deal. So that's I'm watching, and vice versa. If price can break back above, 234-ish, 235 maybe, I think that's a big deal also. But so, I consider this maybe no signal at this point, but the longer this moves sideways,
energy building.
Yeah, it could be energy building, right? And the prior trend's higher, so we like to see it go higher. But, sometimes this type of chop, I look at it as changing of hands, of stealth distribution going on sometimes too. I worry about that sometimes of people, trying to hide their selling. So again, I don't make a decision on that, but it's got to prove itself. And IWM, small cap, risk on type name, IWO, I look at that one too sometimes. It looks exactly the same though. This is the growth ETF for the Russell. Same thing though.
Yeah, it's interesting. Just like when I see the Russell, a friend of mine one time said, he goes, it's like a door. It's like a dog running in between two doors. Eventually, once the one door opens, the dog runs out, and it runs much further than you think. And I think about that analogy anytime I see a really, consolidated type market, and that's why I've been looking at the Russell quite a bit, because I think that the Russell I think there's going to be opportunity there. I mean, for me as a future side, that's probably one of the top markets I'll be looking to trade if you do start to see a breakout, because I haven't done anything in it for some time. I think a breakout with full cooperation from the other indices, I think that, the Russell becomes a market to trade.
Yeah, and I'll be honest, Russell really hasn't led. I mean, it led in here a little bit, but really the mega caps really have been leading the market for a very long time. It'd be nice to see the Russell take some leadership, because that would definitely, in my opinion, be more of a risk-on type scenario and give me more confidence in the market too.
Yeah, last November was, I think, the best month on record for the Russell. I think it was 18%, and they called it the November to remember. And I remember talking about it a lot, and that was a time where it really did lead the rally, and you saw really full participation, cooperation with all the indices. And I look at it now, it could be the same thing in either direction, really. I mean, let's face it, it's as much as I think, I talked a little bit about how I think for my longer term stuff or even my swing stuff, I really like to still buy NASDAQ on dips, even S&P. But if it starts to really break down bearish with the Russell confirming that, I would step back from even buying stuff in my longer term portfolio.
Really? Okay.
Yeah, I mean, because I think that the Russell could, because then I would need that confirmation that it stopped again, because I would, unless I was piecemealing in something for my longer term stuff. But I think that the Russell is just, if it starts to get hit here, I just look at that chart and go, it's just something to keep an eye on. We'll say that.
No, I agree with you. I think that is one of the charts to watch.
No doubt. Maybe let's go to the S&P now and see what you think. A comparative. I want to keep it on that same time frame. So yeah, I mean, you see this, and this goes back to when I see this type of setup, do you look at the divergence between the indices and say, like, I know that we've been really talking about this a little bit to where how we think the Russell's important. It's like when you look at the S&P right now, just give me your thoughts on what you think when you, after you look at the Russell and you look at the S&P, is even for potential trades, or once again, what you'd be looking for.
Yeah, I mean, in a lot of ways, S&P is leading it down, right? I
Yes,
mean,
I
this
agree
is,
with that.
yeah, I mean, so the question is, and let's go and flip charts to like Apple, right? Or Amazon, right? So the question is, how much are these mega caps controlling the indexes? And I think that they are. I think that the mega caps, are really basically in charge. And I think that there's going to be, I mean, how much more growth and again, this is not really technical analysis, but how much more growth does Amazon have? Does it have another 10x, 100x? Or is it kind of towards the end of its, doing those double, triple digit type gains? I don't know the answer to that, but I think that they're going to be leading the market on the downside, and I think that they're going to push the SPX with it. And look at the RSP, right? RSP is back in this range, very similar to IWM, equal weight,
Yes.
which is also equal weight, and that's you want to look at 145, I call 145.50. If RSP breaks below 145.50, I think that's a false breakout up here, right? Go to a weekly time frame. It's going to get ugly now, but false breakout at this point, and confirmations for me would be maybe 145.50, and then there's a lot of space down here. So that's the bearish potential scenario, I think. But that's what I'm looking at right there, and that's pretty ugly looking scenario.
Yeah, I mean, that's why I feel like after even watching everything with you today, it's like the S&P. I get the sense that you think the S&P is leading us lower. You said that. I feel the same way. I said it earlier. I said when I looked at my charts, the S&P is telling me to sell the rallies for now. NASDAQ still tells me we're rangy, and so does what still looks bullish. And then the Russell looks like it's just in a complete range-bound trade. And I think us both thinking that we're at a critical time right now. It's going to be interesting to see which one really starts to push and probe the other one to start to get all of them to start to work together, because I feel like we're seeing this massive divergence right now. And I feel that for me, I know myself as an intraday trader and even a swing trader, when you've got a lot of divergences in the major indices on the daily charts that we looked at, and we don't even really have great clarification on even what you're seeing with the breadth. It's like we saw that it was weak for a period of time. Now it's trying to grind up. It's just certain things you look at and you say, what's going to give? What's going to be the thing that breaks? And I think we'll kind of leave on that today before I let you go. What would be the thing that you feel that would give you, what do you think we should be looking at to start to really, the one thing, let's say, the main thing that would say this is going to start showing us that this is what's going to start happening next?
I mean, in the end, price. I mean, I hate to say price, but you got to just watch price, because I mean, a price under declining moving averages, that's bearish. I mean, let's just keep it as simple as possible. That's as bearish as you can get. If these moving averages start to flatten out and price gets above it, now I think we're at least neutral, if not potentially ready for that next the bull run. And remember, a lot of people are 1 foot in the door, 1 foot out of the door. They're going, the market is whipping them around so fast. And I think that's a problem too. I mean, when you look at the equity only put call ratio, which is right here, and I always, put this in market, this is the sentiment, right? And so it's not extreme. It hasn't been extreme since, well, that was COVID, right? That was the COVID bottom right there. That was extreme.
Yeah.
But there's nothing, so if I see some extreme type readings like this, then I'm gonna get bullish, right? This is what I'm looking for to really get bullish, if this is a protracted downtrend that we're starting. I don't know if it is, but if it is, and things start to look really bad, I'm looking for the put call ratio equity only to look like this, and that would get me into a more bullish sentiment.
Yeah, I'm glad that you pulled this up. That's a very interesting chart looking at that. And I asked you that question. I'm going to answer for myself. The one thing I'm going to be looking for is just, I think, just the full cooperation, whether it's all of the indices staying below the moving averages. I see my Bollinger Bands opening up. I start to see the cooperation start to happen, whether it's bullish or bearish, for the indices start to work together. I think that is going to be an early tell for what I think can be an extended move. I see so much divergence to me that I feel that it's just a push and pull market. No matter what, you're going to have one that leads weaker, one that leads stronger. You're going to have these ranges. And in my experience, it always comes down to when they all work together. You go back to that November to remember in Russell. That was a great time to be long pretty much anything. And it was the Russell that led it, and they outperformed. But when you looked at everything else, the charts looked so similar. We are seeing divergence in so many things that you showed us today, Jack. For somebody who's got a little bit wider time frame than me, looks more at the cash markets, looks more at the stocks, that it's the perspective is right now is that it's hard to really be anything. It's really so much of, do we start to see everything start to open up and look like this one trend is dominant over the other? As bullish as we've been, most of us out there, I mean, if you're not bullish, it's because you're just fighting the tape. But right now, I feel like a lot of people are looking at it going, eh.
Right. Exactly. And then that's the complacency, right? There's a complacency in the market that's, I'm not bearish. I mean, short term, I'm bearish, but longer term, I'm still bullish because the trend is still higher at this point, right?
Exactly.
We haven't seen that change yet.
I mean, that's one thing. I'm going to take it just to you and I for now. That's one thing that is so important, is that as much as we talk about this, has the primary trend really gotten cracked down that much?
Right.
It really hasn't. Which is, like I said, the story is yet to completely be told. Jack, I appreciate you taking the time to speak with me today. Let everybody know where they can learn more about you on Twitter, if you've got a website, anything, anywhere that you like to send people.
Sure. So on Twitter, AlphaCharts365, that's my handle. I post every day there. I run some scans I post every night that are pretty good. On the weekends, I do post some YouTube videos. I link them on Twitter. So that's a place to find me, and you'll find all my information there. So that was a lot of fun today, Anthony. Thank you so much for having me.
Oh, thanks so much. Everybody that's listening, next week we have Julia Cordova on the stream. That'll be fun. So make sure you hit that subscribe button here on YouTube. You could also subscribe to Futures Radio Show anywhere where podcasts are available. Check out AnthonyCrudele.com. Jack, you're the man for taking time to speak with me today. Everybody give Jack the thumbs up on Twitter. Reshare this tweet later as well. All shows are recorded. So if you missed today's, it'll still be recorded here on YouTube and all of my audio platforms. Jack, you're the man. It was so great to speak with you. It's the first time we've spoken. You're such a good guy. You're one of the good guys on Twitter. I love how humble you are, how honest you are. And that's why I'm such a big fan of yours, because you just say it the way it is. I give you a lot of respect for talking about just the way that you approach markets and everything. So I appreciate you, my friend. I really do.
I appreciate that, Anthony. You have a great day. Thank you so much. Again, I had a great time today.
All right, everybody. That's it for us today. See you next week. Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a 5-star review on iTunes. Never miss an episode. Go to AnthonyCrudele.com and get on our email list for show notifications and for free content that is exclusively for subscribers. Also on AnthonyCrudele.com, you will find tons of videos and education on trading futures, options, and crypto. Past performance is not indicative of future results. Opinions expressed are solely my own and my guests, and they do not express the views or opinions of my sponsors. Futures Radio Show is produced by Crudele Productions.